Hey there, it's Chad. I'm the Principal Tax Return Preparer at Tax Preparation Services, and I'm also an online ESL teacher. So today we're going to talk about one of the great benefits of being self-employed, which is the home office deduction. To qualify for the home office deduction, you use Form 8829 and then report that amount under the business use of your home on Schedule C. There are two different ways to take the home office deduction, the actual and simplified methods. So the actual expense deduction looks at direct and indirect expenses of your home. It allows you to claim a percentage of your utility bills like sewer, water, electricity, gas, and also your mortgage or rent. So you calculate your percentage based on the percentage of your home used for your home office. If you're wondering about internet, phone bill, or other expense deductions, you can go ahead and check out my deductible expenses video. For the actual expenses method deduction, I'll discuss 3 ways to figure out your home use percentage. The first is to measure the square footage of your office and divide it by the total square footage of your house. The second method is the number of rooms method. So if all of the rooms in your house are roughly the same size, you can take your office, which is 1 room, and divide it by the total number of rooms in your house. Since most houses vary quite a bit in room size, this usually isn't as feasible an option for most people. So the final way we can calculate your home office percentage is the net square footage method. This is really just an expansion of the first method I mentioned. All you have to do to figure this is, again, figure out the square footage of your office, but instead of dividing it by the square footage of your home, you use the net square footage. In the net square footage calculation, you subtract square footage from common areas, such as hallways, foyers, stairways, landings, entranceways, as well as water heaters and heating and cooling equipment. So, to most taxpayers, this method isn't as well known as the other two, but it's definitely one of the most powerful. It's the method that I actually prefer to use when filing taxes, if the pros outweigh the cons, which we'll discuss in a minute. The IRS has stated that you can use any reasonable method to determine the business percentage. So this net square footage method is actually commonly found in cost accounting practices and is used by government contractors and educational institutions. Actual expenses related directly to your home office, like painting, professional cleaning, or other general repairs, can be deducted 100%. Indirect expenses, like utilities and mortgage or rent, you use your calculated office percent to claim a portion of it. You can also claim depreciation of your house for your home office. So, the depreciation of your house is where one of the main downsides to using the actual expenses method comes in. You will be subject to depreciation recapture of your home for the business use of your office. Even if you don't claim any depreciation of your home, you will be taxed on what you could have depreciated. The depreciation recapture is taxed at 25%. So, for example, if you depreciated $4,000 worth of office space over several years, and then you sold your home, $4,000 of that sale may be taxed at 25% to recapture the depreciation you took. So you would owe $1,000 in taxes in that case. The simplified method for deducting your home office gives you a flat rate of $5 a square foot up to 300 square feet. So if you tell your accountant that you have a home office and they give you a flat rate deduction without asking about the size of your office, that should be a big red flag, especially if they max out the flat rate deduction for $1,500. They need to be accurately reporting your information, otherwise you could be liable. This method may not give you as big of a deduction, but it may be more worthwhile than trying to keep track of your home office depreciation over the years, adjusting the basis of your house, and paying the recapture tax of 25% of the portion of your house you could have depreciated. One good thing about the simplified method is that it doesn't affect your home value at all. All profit from the sale of your home would be yours to keep, tax-free, as long as you qualify for the home sale exclusion, which can exclude up to $500,000 in profit from the sale of your home. So briefly, there are 3 criteria for that home sale exclusion. First, you have to own your own home for at least 2 years, and then you would have had to have used it as your primary residence for 2 of the previous 5 years. And the third is that you can't have claimed the home sale exclusion in the last 2 years. So that about wraps up our information on the home office business deduction.